Welcome back. Well, the markets are a little bit weak, but one stock that's doing very, very well is Jindal Stainless. Well, that stock is up and about in today's trading session, and it's a big outperformer. Let's find out more. We're currently joined by Mr. Anurag Mantri, who joins us to help us out with the past quarter's performance and the way ahead. Hi, Mr. Mantri. Good to see you, and always good speaking to you. Well, let's get a couple of details out of the way then. The quarter looks like it's quite good. Volumes maybe for some part of the street a little bit disappointing, but profitability, no worries. So give us two numbers. One is on the volumes. You were guiding for a 20% growth. Do you stick by that? Do you want to up that? And out of those volumes, the second half of the year, how much will exports contribute? Because that appears to be a bit of a pain pocket. So on volumes and on EBITDA per ton. Earlier you were saying 19 to 21,000. Do you want to drift towards 21 or do you want to drift towards 19,000?
Okay, thank you, Nigel. So on volume side, as you mentioned that we guided 20%, I think looking at the volumes currently, because if you recall last quarter, the export were down actually because both our key market, Europe as well as the US, are actually struggling in terms of the demand side. So exports were down, but still we managed to have a decent volume in last two quarters by pushing out some of the volumes in domestic market, and especially in some of the grades like we supplied very high strength grades into Vande Bharat trains and all these. So those actually pulled up our volumes in the last quarter. Considering that, we believe that I think the FY24 we should be able to do 20% plus volume growth. I'm not giving a specific number, but at least 20% above volume growth looks now more achievable considering the current run rate between and our agility to play between the domestic market and the export market. On the EBITDA per ton side, if you see, we are H1 was we have a close to at 20,000. Now our guidance is 19 to 21. I would stick to our guidance of 19 to 21 at this stage because we really don't know about the export markets at current stages. So because there are too many things happening externally and exports, we are really not too sure how this will pan out. So neither we are revising lower nor I am upping towards 21. Right now we are at the mid of the year, we are in between of our guidance of close to 20,000. Let's continue to maintain that range. Maybe after quarter three will be more clear because too many external things in the export markets are happening which we are not sure of the outcome.
Got it. But export volumes as a percentage of total volumes, will it move up? Now it's in low teens. Earlier it was at around I think high teens, and prior to that I recall it was more than 20%. So what will it contribute in the second half of the year?
Yeah, so quarter two volumes were down, export mix was down to 13%. We expect that probably quarter four, some of the export volume should pick up. But overall, we we should be able to achieve our 15% of the mix through exports in this market.
Right.
Despite
you know what was interesting?
Sorry.
Right. What was interesting is that you also said, Mr. Mantri, that you are looking to sell your Indonesian plant. What I wanted to know is by when and for how much?
Okay, so Mangalam, if you recall Indonesia, if you see, we are struggling on two counts because Indonesia is largely now dominated by the Chinese players. So, and because of that, earlier we were able to export from Indonesia to Europe and US. Now, because of the Chinese dominance, Europe and US has put a huge anti-dumping duties on the Indonesia, also equal to China, which has made making our business model unviable at that stage. And just to cut short the losses, quarterly P&L losses, we decided to explore all the options. In terms of the value, it's quite early to say because we just board has just approved to explore all the options. It include divestments, bringing out the assets. We are keeping all the options open right now and selling the part of the assets. So it's difficult to assign the value. Maybe I think next quarter onwards we will be more clear once we run the process towards it. That's how we'll move towards it. But it will help to cut our P&L losses and improve our consolidated financials in a long run.
Right. So we get that you can't give us a value. Can you give us a time by when do you expect to take it off?
We want to get it off now faster because with that, but again, please appreciate that timeline because in these processes of timeline which is difficult. But as I said, I think by next quarter when we meet, I think we will be more clear and we will have a more firm up things like which plan we are pursuing finally.
Okay, all right. That'll help the operational performance as well, and let's see the bonus will be if you get some money for it as well. But Mr. Mantri, we're running a little short on time, but I wanted a couple of more details. One is your debt number. If I take JUSL as well into the picture, the consolidated debt number, including JUSL, has come down to around 4,500 crores. Where do you see this number headed? Point number one. And JUSL, I think you were guiding for around 800 crores. Do you think you can do better than that, going by what's happened in the first half?
Okay, so on debt number, if you recall our debt number guidance, in fact, we have done better in our debt numbers as compared to our guidance last time because
Yes.
we did quite a lot of working capital optimization, which has freed up almost 500 to 600 crore cash in the system, which we have effectively utilized to reduce the net debt. So if you recall, Nigel, last time we guided that closing FY24 debt number to be around 5,400 to 5,500. Now we are improving that guidance and the closing debt number we should be able to, we are not reducing our capex, capex remains 3,200, but we will now increase our internal approval more to meet this capex, and the closing debt number of FY24 is now expected to be close to 4,700 CR instead of 5,000 earlier guidance.
That's good. So 700 crores lower and you're on course. And JUSL EBITDA number, what will it be?
JUSL is a tolling business, Raji, so it will be a stable number of close to 800 crore because it does not have because it's generally a job work charges.
All right. And finally, before we let you go, the pledge. You often say that, it's not market linked, and you will hear some positive development in a couple of months where quarter after you said this last time. So when does the promoter pledge go off? Because it's still about 77.5%.
I know it's a bit frustrating despite, and we just got upgraded to AA category. But the only thing is now I'm very hopeful now with the confidence because all the banks have approved. It's only one bank which is struggling with the technical dates in terms of their committee, which is expected now sometime in next 2 to 3 weeks. So I think by end of this calendar year, by December, we should be able to do away because all other banks have approved already the removing of pledge.
Okay, so we'll wait for that good news by the end of this calendar year. But congratulations on a pretty good quarter, Mr. Mantri. You're sounding confident about the second half of the year. And I recall a few quarters ago, we were asking you whether you'll pay dividend. Now you've paid dividend for the last 3 quarters. So good for your investors, and the street clearly is impressed by what you had to say. Thanks so much for joining in. For the time being, we'll wrap up on this edition of Chartbusters, but you stay with us. Trading Hour comes up next.